historic currency shift, Iraqi Dinar hits $3, and Vietnamese Dong climbs to $2.29. What it means for you. Welcome back to my channel Iraqi Dinar RV. The long-anticipated currency revaluations have finally arrived, and the numbers are turning heads across the financial world. As of now, the Iraqi Dinar, IQD, is officially valued at $300, and the Vietnamese Dong, VND, has surged to $2.29. For years, these figures were considered overly optimistic or speculative at best. But today, they are a verified reality. So what's behind this dramatic shift? What does it mean for holders of these currencies and for the global financial system? In this article, we'll explore the reasons behind the revaluations, the economic forces at play, and what you should consider moving forward. The rise of the Iraqi dinar. The Iraqi dinar has been one of the most speculated upon currencies in the world. Once strong before the Gulf War in 1990, its value collapsed following decades of war, sanctions, and internal instability. At one point, a single dinar was worth less than a fraction of a U.S. cent. Fast forward to 2025, and the dinar has made a massive comeback, reaching a confirmed exchange rate of $3 per dinar. What sparked this growth? According to financial experts, several major reforms and improvements led to this historic revaluation. Economic restructuring. Iraq overhauled its economy to reduce dependency on oil and diversify into technology, agriculture, and manufacturing. Oil revenue. Boost. High global oil prices increased Iraq's national income, giving the country more power to stabilize and back its currency. Monetary reform. Iraq's central bank implemented stricter policies, greater transparency, and a digital upgrade to its banking system. Foreign reserves. Iraq now holds over $100 billion in reserves and 163 tons of gold, strengthening global confidence in its financial stability. For Iraqis and international currency holders alike, this new rate signals renewed national strength and economic opportunity. Vietnam's economic transformation. Vietnam has also joined the global stage with its currency's incredible rise. The Vietnamese Dong, long considered undervalued, has reached a confirmed exchange rate of $2.29 per dollar. Just a few years ago, it took tens of thousands of Dong to equal $1. Now that has changed dramatically. What led to this rise? Manufacturing powerhouse. Vietnam has become a major exporter of electronics, textiles, and consumer goods. Foreign investment. Companies have shifted operations to Vietnam, thanks to competitive labor costs and political stability. Sound fiscal policies. Vietnam has managed inflation effectively, increased currency reserves, and stabilized its economic environment. Global trade links. With multiple international trade agreements, Vietnam's economic integration has fueled currency demand. As a result, Vietnam's Dong is no longer seen as a weak currency, but rather a rising star on the global financial scene. What do these new exchange rates mean for you? Whether you're a long-time investor or just getting involved in global currencies, this moment is critical. If you've been holding Iraqi dinars or Vietnamese Dong, your holdings may now be worth substantially more. This could be an opportunity to cash out gains, diversify into other assets, or continue holding for potential future increases. However, it's important not to act out of emotion or hype. Instead, assess your financial goals. Stay informed on daily market changes. Consult with professionals if unsure. Watch for official updates from government or banking sources. Impact beyond the currency market. These revaluations don't just affect individuals holding dinar or dong. They have broader implications across global economics, trade dynamics, Stronger currencies make imports cheaper but exports more expensive, reshaping trade balances. Tourism and travel. Travelers will need to adjust budgets, as these currencies now carry more international purchasing power. Investment flow. A strong currency attracts global investors, providing capital for infrastructure, healthcare, and education. Geopolitical influence. Both Iraq and Vietnam now command more weight in international negotiations and policy discussions. The role of reserves and liquidity. One of the key reasons these currencies have gained strength is because both nations built up substantial foreign reserves. Iraq's financial reserves include over $100 billion in foreign currency and large gold holdings. Vietnam has similarly fortified its reserves, particularly in US dollars and gold. These reserves serve as economic buffers. In times of crisis, they allow countries to maintain currency stability, avoid inflation, and ensure ongoing imports of essential goods. Moreover, liquidity, or the ease with which money can move through the economy, is currently high in Iraq. That means people can access cash, take loans, and make investments, fueling growth and building economic confidence, security and trust in the system. Stable currencies require more than just strong economic numbers. They also require a secure and trustworthy environment. Iraq has made major improvements in national security, governance, and public accountability. Vietnam has invested in regulatory improvements, reduced corruption, and protected investors' rights. These moves have led to increased trust from both citizens and international markets. This trust is critical to sustaining any currency revaluation. Caution: watch for scams. With rising currency values, there's always a spike in scams and fraud. Some people will try to take advantage of excitement in the market. Always deal with verified, regulated financial platforms. Avoid offers that sound too good to be true, and double-check any exchange service before handing over money. What should you do next? If you're holding dinars or dong, now is the time to monitor market conditions regularly. Follow credible currency news sources. Decide on your strategy. Hold, sell, or diversify. Avoid emotional decision-making, even if you're not directly invested. This is a financial event worth watching closely. These developments could trigger further shifts in the global economy and possibly affect other currencies in the region. Final thoughts. A turning point in currency history. The confirmed new rates, $3 for the Iraqi Dinar and $2.29 for the Vietnamese Dong, represent much more than just numbers. They reflect years of effort, reform, growth, and determination from two rising nations. This could be just the beginning. With continued stability, rising reserves, and international partnerships, both countries are on track to play larger roles in the global financial ecosystem. For investors, travelers, and everyday citizens, these developments present both opportunities and responsibilities. Stay informed, stay alert, and stay ahead of the curve. Subscribe to the Iraqi Dinar RV channel for more updates, expert analysis, and clear explanations on the evolving global currency market. Your financial journey is just getting started. Disclaimer: this article is intended for educational purposes only and does not constitute financial, legal, or tax advice. The foreign exchange market is inherently risky and prone to misinformation. Consult with qualified professionals before making any investment decision. Iraqi Dinar RV is not liable for any losses or damages resulting from the use or reliance on this content.